All right. Hey there. Good morning, everybody. It is just after 11 a.m. Central Standard Time here on Friday, the 3rd of January, 2025. Hopefully, the first 3 days of the year are going great for y'all. They are going great for us. We're getting some real good trades over there at the Trading Academy and the Traders Club, all that kind of stuff. A lot of education, of course, going on as well. Again, we get here and people start freaking out, right? They're like, oh, it's the end and whatnot. But I'm going to tell you guys, we've got another leg going up here. I think we're going to have a pretty damn good year here overall. What happens beyond that maybe is something different to talk about. But I think we've got another good year here, guys, especially for Bitcoin, for stocks as well. For those of you that missed, NVIDIA just gapped up a bit. So they're doing their good thing. It's just, you got to be careful out there. Right? Because a lot of the people that you're going to come across online, first of all, are not really traders, right? Or they just started. They're good at marketing, so they have a big following because they market. They say what you want to hear. See, my issue is that I don't go out there and say what you want to hear. I'm not going to tell you you're going to learn to be a great trader overnight. I'm not going to tell you that you can make millions of dollars a year trading just an hour a day. I'm not going to lie to you about that stuff, guys. Because what does that do? That doesn't help you out any. You think that's what you want to hear. You think that's the way things are. And so you got people out there who are going to tell you what you want to hear to get you to either follow them because they can monetize you as a following, or to sell you whatever they happen to be selling, which, probably not going to be all that great because they don't have the experience, right? So I've been doing this this is 31 years. It'll be this year. Fibaswani's over there in the audience. I can see him now. He couldn't make it today. He's in the office, actually. But he said he's going to be joining me next Friday. So make sure you guys tune in for that. But Fibbo's been doing it over 20 years, and he'll tell you the same thing I'm telling you guys. You're not going to, all these things everybody's promising you, all these things that you want, as far as turning $100 into $1 million, in the next year or in the next month or in the next day or whatever, all that silliness, all that short-term, the short-sightedness is why you're losing money. But there are a lot of accounts on social media, okay? There's a lot of accounts on social media that are going to tell you exactly what you want to hear. Okay. And you got to be careful with that, because when you're new and you haven't been doing this for a while, you don't understand. You don't know what you don't know. And that's the way it goes with any skill set out there, right? With any bit of knowledge in this world, you don't know what you don't know. And I think that's probably, there's a lot of people that knock college and whatnot. And those of you that follow me know I have, numerous degrees, especially in the graduate. I've got a law degree and a master's in psychology and a master's in homeland security. But the one thing that you really get if you pay attention there is, as you go through college, when you start at your associate's degree, it's a very wide base, right? You get your bachelor's and it's still wide, but it narrows in. You get your master's and you're narrowing in more. You get your PhD and you're narrowing in even more. And if you pay attention, what you're learning is the more narrow you get, the more you understand, the less you know, right? Unfortunately, most people don't get that with anything in their life, whether they're looking at, college or, information in general, knowledge. And so they get to trading and again, they want it to be, they're always looking for the next kind of indicator that's going to magically, make them a millionaire. They're looking for the trading strategy that's going to make them rich overnight. These things don't exist, guys. But here's the one thing. If you learn how and why markets actually move the way they do, and you learn this underlying stuff, then those indicators, those strategies become exponentially more effective, because you understand the underlying why and how that it's working, which means you have a greater chance of taking the trades that it signals you to take that are going to be profitable, and, kind of staying away from a lot of the trades that it signals for you to take that are going to lose you money. All right. So as we enter this 2025, I just kind of want to start off with that reminder there, because at the end of the day, guys, I'm an educator. All right. At the end of the day, if you are here, even if you're not in the Trading Academy, that's fine. If you're here, I'm going to try and teach you something. Okay. And so the biggest thing that I can teach you, the thing that will have the greatest effect on your success is, one, you need to learn proper risk management, period. End of sentence, mic drop, whatever you want to say. That's it. I don't know what the kids say, no cap. I don't know what that means. It just sounds appropriate that it goes there. For those of you that don't know, yes, I'm old. I turned 50 in November. But yeah, maybe the white hair here and the beard maybe gave it away, right? But seriously, yes. Number one is risk management, right? But once you get beyond that, once you learn that, right, it's all about understanding the psychology, the emotion that's involved in trading. And a lot of people like to hit back with but so much of trading is algorithms these days. Well, yeah, but they're programmed by human beings, which means, often, not purposefully, emotions are kind of, leading the programming, right? But beyond that, we know, remember, because markets are not random. Human beings are not random in markets, right? Most human beings don't understand what they're doing, right? When it comes to how they act and react, but there is a rhythm, there is a flow, there is a rhyme and a reason to the way in which they do. Okay. And that's what gives us these levels that we look at for price to move. That's how we're able to say, look, it looks like price is going to head to here and probably then pull back, or this is the target here, because it's based on the way that human beings generally tend to act and react. And so when you're coding algorithms, you're putting those levels in, and you don't have to understand that that's why you find those levels, or how if you're using Fibonacci extensions for your targets, right? You don't have to understand why that does. You just, as you're pointing in the algorithm, you just know that generally these are kind of the way that the price action moves, right? But it's all because at the end of the day, it's humans, right? That's what's going on. And the sooner you learn that, the sooner you get off all the other nonsense that's online, as soon as you get over all that other crap that's out there, and you understand this, your trading life is really going to start to take off. But people have to be proven, right? And that's what we do, at the Trading Academy. That's the basis. I mean, yeah, you learn Elliott wave, you learn Wyckoff, you learn price action, you learn price action and volume analysis. But all of that is so that they're tools to help you understand how and why price moves the way it does, and to help you identify it. You're not coming there to learn Elliott wave to learn Elliott wave. You're not coming there to learn Wyckoff just to learn Wyckoff. You're learning them as tools to understand the market, how and why it moves the way it does. And I'm telling you right now, guys, the more you can understand about that, the easier your trading becomes. Or I should say the less difficult, right? Trading is simple. It's not easy. It's not easy because you have to deal with your own emotions and your own psychology that goes into it, being a market participant. And that's what makes it exponentially more difficult. Learning, rules and guidelines for trading systems, that's easy. Anybody can do that. But following them consistently is the issue, right? I teach people all the time how to trade, and how to, do proper risk management. And a lot of them, they learn how to do that proper risk management, and then they don't do it, or they don't do it consistently. And it shows up. It takes one bad trade to wipe you out, guys. You can have 10 great trades in a row and make all this money, and the next trade you don't use proper risk management, and then all of a sudden it goes against you hard and fast, and then your emotions jump in, and you're fearful of getting out because, oh my God, the minute I sell at a loss here or at a much less profit, it's going to turn and go the way I wanted it to. So you have to deal with all that, and that's not good, putting yourself in a situation. Don't trust yourself when your emotions are coming up. All right? So, yeah, see, Sats McGee here says, how about that stem at Andrew Bennett? Stem is something I've been talking about for, I think, over a month now. We've been kind of watching it potentially bottoming. So I've been discussing it. Andrew's been discussing it as far as trades go there at the Academy for our students. And last night I was mentioning it. I had a slew of stock charts last night in the market wrap. And STEM was one of them. And I said, okay, listen, here we go. We've got this. We've probably got one more move up here. And when we do, I think I had what, 100 or $1.14 as the target. Yeah. And this morning we were around 75, 77 cents or something. This morning's low was, let me see there, right around 75 cents. So you're basically looking at a 60, and then so it rallied this morning up to $1.22. So absolutely banger move this morning, quick and easy, 60% rally, guys. But not all your trades are going to be like that, right? But the goal is to understand enough so that you're in enough good situations so that when that happens, you're there and you can mark it up, right? The goal of a trader, just so you guys know, the goal of a trader is not to knock it out of the park on the individual trade you're on. Is to consistently lock in profit. If you can consistently lock in profit, time and compounding is going to take care of the rest of it. Stop thinking of trading as something you're doing each time you go into the chart. Think of trading as a system that you're doing, and it's over time. No one trade is worth anything more really than the next trade. Your system is the golden egg, or it's the goose that lays the golden egg, okay? So focus on the system you're creating, right? So again, going back to what we do at the Trading Academy, we teach you these things, right? We teach you, okay, well, here's how Elliott wave works. But it's not just enough to teach you, listen, this is wave 1, 2, 3, 4, 5. This is how it works. This is a correction. You need to understand, okay, well, I got all that now and I can identify that. But how does that help me actually trade? You have to have systems of entry. And so we teach as well. We teach you, how do you approach the market? When the market is in a certain mood, how do you approach it versus when the market is in a different mood? See, this is the stuff that changes you as a trader. But new retail traders, often they're looking for the next big promise of an indicator or promise of a strategy that's going to make them rich just by learning it. And then they go in and it doesn't. They end up losing money. Part of it's their fault. Part of it is the marketing by whoever's got the indicator or the strategy that makes you, again, they're going right for what you say you want. They're putting out there, you're going to get that with this. And you want it, so of course you buy it, and then you go, okay, crap, it's not really working. But again, the more you understand about this other stuff, the stuff that very few people are actually out there teaching, because it's a lot more difficult. Most people don't understand it. But the more you learn about that, the more powerful those indicators or those strategies or those trading systems become. Plus, it allows you to create your own and or create a version of one that you really like. Like you may get into one and go, man, yeah, he says to enter here, but man, it would be much better if he did this. And next thing you know, you've got your own system branched off of their system that works better. We do this all the time, guys. We got students that are constantly creating their own systems of entry and take profits and trading that they get in there that work with who they are, what kind of time they have to trade, stuff like that, okay? But anyway, so I just kind of wanted to start that up because 2025's here. Everybody's still freaking out, man. Why are y'all freaking out? Because stocks pull back and somebody online told me it's the end. It's going down now. They drew a really crappy looking ascending wedge and they said, oh my God, look, it broke down from the wedge. So that's the top. Yeah, I got it, right? But I don't think so. I don't think that we're near the top at the moment here. I think we've got a lot further to go. And so that's what we're going to kind of look at here. Andrew said on his, Andrew's one of our head traders over there in the Traders Club and over there in the Trading Academy. When we're talking about STEM, he said it's a 3x move so far in the current trade. They got in at 36 cents. Yeah. And how did all this actually start? This was something, I think, Andrew, as a matter of fact, I think you brought it up in one of the weekly, I do those 3 times weekly live training sessions. I think you brought it up during Wyckoff session on a Monday or something, right? Over a month ago. And we started looking at it back then. And then you kept up with it, looking at entries and whatever for our students there. And so been a great trade for sure there, for sure. So anyway, so, these are the realities of trading, guys. Okay. I'm not here. I've been saying it for years here live. I'm not here to blow smoke up your ass. I'm here to tell you the truth about trading. I'm here to tell you the realities of being a trader. Because I believe that if you understand that, and then you decide that this is still something you want to do, you're going to have a lot more chance of being successful. Most of us come in, me included, when I first came in thinking of trading completely opposite of the way it really is. I came in thinking, man, 30 years, it's going to be 31 years ago now. I came in thinking, man, I'm going to get rich overnight. It's so easy. No worries, no problems at all. And then I got in and started losing money, and I did for a few years. I probably lost more money than most of y'all, even think about. And it took me actually deciding one day about 2.5, 3 years in, I sat with myself down and I said, listen, self, if this is seriously something you want to do, you got to get real about it, because this is bullshit. You're causing yourself to lose all this money, and for what? And really, it was that. And when you make that change inside you, it clicks. And all of a sudden your attitude, it changes. And at that point, I really started learning absolutely everything I could learn about trading, from the different methods, the different styles, the different strategies, to the different indicators, to the psychology, the mentality, the emotion, everything. And that's what I've done, for almost 30 years now since that point, to get where I'm at. But that was the change. It had to be made. I couldn't continue with the way I was thinking when I first came in, because again, that is 180 degrees different than the way you need to think. All right. Give me a moment here. Let me turn off this heater. Oh, getting a little warm here. It's going to be cold here in Houston next week. We're going to be down below freezing. I bought this property here just over 2 years ago. Every freaking winter, a pipe bursts. I got to pay $1,000+ to get it fixed. I'm 2 for 2 right now. It sucks. I'm hoping to make this a year that it doesn't happen, and I can go like 2 for 3. But anyway, yeah. Let me see here. So that's what we're kind of looking at. All right. So these are the realities of trading. I want you to understand this before you get in, because otherwise, if you don't realize this and you don't, accept it and become, truly serious about trading, more than what you may think you are at the moment here, then what happens is you just end up losing a lot of money. Okay. Now I'm going to be honest. I don't feel bad about taking anybody's money in the market. If you're in the market, you're an adult, you're making adult decisions. If you choose not to learn how to trade correctly or profitably, consistently, that's on you. It would be the same way that if I decided I wanted to go, try out for, I don't know, some professional sports team without any real training, right? If I get hurt, that's on me, and I will get hurt. So, it's life, guys. You just have to decide how serious you are about it. And I bring this up right before we go on the charts here, because most people are not honest with themselves when they get into trading. They say they're really doing the work, but they're not. They're doing the bare minimum if they're lucky. They're not really putting forth the effort, the discipline, the consistency, the patience that's required, the focus to learn a new skill set. It's not just trading, guys. It's any skill set you want to learn. Okay. So yeah. So, and if you kind of question, am I legit and whatnot, just look at the comments that are coming up here. Different students, some still with us, some not with us, telling you what they think. And so my goal at the end of the day is, and Fibbo's as well, and and Andrews and Vince's, is basically, listen, if you guys are really serious about learning trade, I mean, like really serious, not like, oh yeah, I'm serious, wink, wink, like we often do in life. But if you're truly serious about it, we're all going to bend over backwards. We're going to do what we can to help you out. But, it comes down to you. How serious are you about really trading? And many of y'all are still in that kind of stage. Again, where you say you're serious, but your actions don't reflect your words. Okay. So just want to make sure I put that out there. Okay. So let me see here. Let's go ahead and jump into some charts, guys. Let me see. Where is, well, I guess we'll look at Bitcoin here first, right? Let me see here. So here we go. We are, hovering a bit more around the 100K than I thought we would initially before we got to it. It is what it is. It happens sometimes, right? But we haven't had a real rejection from this 100K area, guys. I mean, we've gone up to, 108 and some change up here. We've come down to, we were over here, once we broke out above it, our most recent low here is where it's been our lowest at around 91 and some change. But that's been it, guys. We basically deviated to the upside and to the downside just around the same amount. And we're just kind of hovering basically around that 100K area. Now, here we come. This is the Coinbase chart, the Bitcoin USD Coinbase chart, okay? And so what we have is we have this large range here that you guys can see. And then we have this local range right here. Now on this Bitcoin USD on Coinbase, we actually got a spring here below both of the ranges at the same time. We're going to rally up, okay? If you're looking at Bitcoin USDT on Binance, your local range here sits a little bit higher. So you got a spring on the local range, but it didn't actually break down below the bigger range here, which is fine. It's fine. Right now, we're focused on this range here. And this range, as you can see here, we're starting to break out above this month's daily pivots here. Starting to get that breakout here toward the top of the range. Another way ranges usually work, if it's accumulation or reaccumulation, like I expect this is here, is that most often you're going to get 5 waves up into the resistance, and then you'll pull back in 3 waves, and then you'll get your big breakout. You get what we call a jump across the creek. So right now we're looking for a potential rejection in this area to pull us down, probably down here to the EQ of this local range, the hourly pivot, that area there. You see here. Yeah, see, that gives you about a 50% pullback. So this would give us then potentially a 1, 3 waves back for a 2, and then you got your 3 on the breakout there. So that's what we're kind of looking at right here at the moment. So yeah, so right now looking for, see if we can get this pullback here. Let me see, what does it look like here on the 1 hour? Yeah, kind of get a rejection here right above this kind of, right around the R1 pivot on the hourly, right above the daily pivot, this kind of area is move up. Like I said, then we get that pullback down toward that pivot, maybe 95, 260 kind of area. And at that point, if we can do this and get that rejection back there, you need to be looking, on these smaller time ranges, a 15-minute, maybe a 1 hour, look for some sort of hidden bullish divergence or something happening down here, some breakout of resistance, something like that. That's going to tell you, listen, we're probably going to reversal at this area. You notice there's a low volume node right here in this target area. And then you want to go ahead and be long on it, because here's the thing. If we're doing that, so like locally right here, we got a 1, 2, we got a potentially a 3, maybe a 4. So we still got probably a little bit further up here. Let me see here. 1, 2. Yeah. So we'll probably break out a bit further here, at least. Let me see here. And so again, generally speaking, whoops. So you got something like this, right? So, I mean, you're going to be looking at now 1, 2, 3 waves up at 108 just prior to the all-time high. 5 waves up, breaks you up there around 111 off that. Now, bigger picture is we're looking to get beyond 130,000 minimally. But we'll get this bigger move up, and then we'll get a decent move down, and then we'll get probably the final move up. But But that's not happening overnight. That's going to take a bit. And so, like I said, I think this year ends up being a pretty decent year as well for crypto, for Bitcoin, for stocks. Oh, by the way, guys, if you were part of Wednesday's Beards and Bitcoin, I know Tillman talked about a giveaway. And so I've got to get those names to him today. I meant to do it yesterday. Got behind with work. But I'll get those to him today, and we'll let you guys know who won on that. And I have no clue what he's giving y'all. So don't blame me. He says it's good. He says it's really good. So you know it is. If you're not, by the way, if you're not checking out and catching our Wednesday podcast, our Beards and Bitcoin, I really think you're missing out. You know, again, we're three guys with a lot of varied real world experience, you know, in finance and TradFi and markets and, you know, all that kind of stuff. And so we give you, you know, their co-owners, Andrew and Tillman are co-owners, co-founders of Arch Public. By the way, check that out sometime if you want, archpublic.com. They're good guys. They really are. And then, of course, you know, I have Texas West Capital that we work with there. So, but I'm telling you, I think you're missing out if you're not tuning into that Wednesday show. Audiences continued building. We're getting regularly around 1,000 viewers, sometimes up to 1,700 viewers live, which is really nice. So, yeah. But every once in a while, we'll have somebody call us noobs. It blows my mind, right? Oh, man. Deadly123, I appreciate you, buddy. Thank you so much, man. I appreciate your appreciation. For that there. Let me see here. Scott says probably going to get him one of those hats he wears. Oh man, those guys are great. If you guys didn't know, that we're not related or anything. We just are all bald and have beards. But they're two really good friends. They've been friends for a while. Like I said, they co-founded their company together. And if those of you really want to know a little bit more about Tillman, you can look up University of Texas. He used to play offensive lineman for them. Number 61. That's why his @ on Twitter is Texas OL 61. So offensive lineman, number 61, University of Texas. But he played there, you know, a little bit ago. But if you want to know, that's so kind of little coolness, right? Not everybody's got that kind of friend. Well, okay, so maybe a lot of people have that kind of friend, but yeah, a lot of people play collegiate football and all that. Let me see here. So anyway, yeah, so we'll let you know about that. Bamboo says Bitcoin dominance is looking nice. What's going on, buddy? Good to see you all the time. Broke today through the daily pivot based on my TA. It should now continue to drop. So alts will now play catch up. Ooh, okay. Well, that's an interesting. I think right now we've got maybe a bit of a pullback on it and then some further upside. I think we've still got at least one more new higher high to go on it. We'll see. Right now we're just sideways. So no big deal if we don't get that final push a little bit higher. But, you know, either way, I think alts are looking pretty good as it is. And here's the thing, you know, you've got a lot of people for the last year that have talked about alts and asking for a year now. Well, where is where's alt season? You know, whatever. What they've, I mean, hell, the meme coins earlier this year had a freaking alt season of their own, right? And we're basically seeing different sectors of altcoins that have been having alt seasons, right? But again, this is something I discussed, you know, that I said at the beginning of the year when we had the ETFs launch. And that was this idea that Bitcoin would continue to rally. We wouldn't see the same kind of alt season, Bitcoin to alt season that we had in the past, because now we have flows going into Bitcoin through the ETFs that aren't leaving to go into altcoins and cycling through and cycling back into Bitcoin. I mean, there's going to be some of it, but generally speaking, a lot of that's flowing into ETFs is just really interested in Bitcoin, not so much altcoins. And so our alt seasons previously were this product of you know, your crypto bros basically, right? Trading and exiting Bitcoin while Bitcoin does a pullback and putting their money then into alts and doing that. And you're still going to see that happening, but I don't think you should expect to see Bitcoin do the big kind of pullbacks it did before while altcoins just go crazy. Altcoins are going to go crazy in sectors, which is what it's done all this year, while Bitcoin continues to rally. And that's what we've seen this year. So I don't know. Do we get some final alt season? Maybe. But if you're waiting for that and you've missed your opportunities, you're not paying attention. There's been a ton of opportunities in alts this past year. 2024 was a lot of great alt opportunities. But that being said, maybe we continue, maybe we do have a bigger alt season coming out, and that's okay. But again, I think generally speaking, we've had a different kind of movement this year compared to, this cycle compared to previous cycles, right? So, Fibasonic, what'd you say? Baldness marks wisdom's start. The beard measures its death. I need to use that for a tagline for Beards and Bitcoin. That's what I need to do. That's great stuff. Scott says AI coins are killing it now. Let me see here. So anyway, so Bitcoin here, again, I think it's looking pretty good. This is looking pretty decent so far. What I would normally expect would be, again, a breakdown, a rejection here. We've got this low volume node that we're coming up into. That's why we got the support here and then the stop here, resistance and all that. I would expect usually a move up into there, pull back toward that mid-range here, the hourly pivot right in that area, give us a 50% pullback, and then the rally up. So again, I believe that we're looking for higher. I think the low is probably in. But we definitely want to see at least a breakout above this interior swing high here on this chart. That's going to be 99,887. So you can say basically you want to see a breakthrough into 100K, and that'll be your first real clue that, okay, yeah, that bottom's probably in there. And then, of course, we'll look for that continued rally up there. But loving the daily pivot, the move above the daily pivot here. What we want to see is on the daily, whoops, we'll look at that here in just a minute. On the daily, what we want to see, let's kind of bring it here, is we want to see an impulsive breakout and close above the daily pivot. Okay. So if we can get a rejection here, especially today, and kind of start pulling back, that would be great. Pull back about that mid-range there. And then that wave 3 coming through there, this would be a 1 and a 2. We'll get a 3, would be significant on that. Now, generally speaking, when we're looking at pivots here, okay, if we don't get this rejection here and this pullback and then the big move up, and we just kind of grind up through here and continue pushing up, the odds are we're going to come up to this R1 pivot at around 104,100. And that'll give us some sort of 5 waves up to give us 1 up. And then we'll have wave 2 back to the daily pivot. Okay. So just watching what happens here. Can we get this pullback and then go, which would be great. Or if we continue pushing through here, it makes people a bit more nervous. But then we would look for, especially once we're breaking out above that, that 99,887 here, closing above that, we're looking up here toward that R1 pivot on the daily at about 104,000, 104,100. And if we get that, that should give us about a 50% pullback to the daily pivot. Perfect. Look at that. Right? So again, we're looking maybe something like this and then the move up, or we're looking for just this kind of grinding up through here, and then maybe it pops. Once we get through this part, maybe it pops up toward that pivot, and then it pulls back. We would expect the daily pivot to hold, and then we'd kind of continue up there with it. So it's really not difficult, right? It's really not difficult. That's all we got to look for with that. Now, you can make it more difficult. I would not advise you to do that. Life is difficult enough. Markets can be difficult enough. Just keep it simple. Okay. Let me see here. really want to see the move down to the 80s first. I mean, you can really want to see it all you want. I don't think we get it. Now, I can't guarantee we won't get it, but I don't think we get it. I think that, you know, this is done here. I think we've got basically a, whoops. I think we've basically got a flat correction here. So you get your A, your B, and your C, or your W, X, your Y, however you want to look at that. But I think that may be done there. You can notice throughout this range, you can notice volume continues to die off, and that's what we like to see, you know, in this bigger range here. You know, that's a real generalized way to look and go, okay, are we seeing maybe accumulation, reaccumulation, or are we seeing distribution, redistribution? But that's what we like to see. Again, doesn't guarantee that we're done yet here. We got to make some moves up and some follow through, but I don't, at this moment right now, I don't see the 80s happening at the moment. Okay. Now, if we do happen to lose the swing low there, then things get interesting. My initial target, if we were to lose this swing low here, my initial target would be the S1 pivot on the daily here, right around 87,000. And that might be your 80s. Maybe dipping a little wick below it as we get into this, this daily fair value gap here, right here at the low volume node. But generally, I would expect this low volume node to hold this support. I would generally expect that to hold this support. Because the only time we've hit it is the initial pullback here when we broke through it. It's rare that you get the first push down into a low volume node and it just kind of tanks right through it. It's very rare that it does that. Usually, you'll have to bounce on it a few times at least before it breaks down. But yeah, I would look at that S1 pivot if we were to break down right around 87,000 as that target on that. So, you know, in case you were, you know, looking for the move to 80s, that's where I would look just based on pivots and, you know, the way everything's set up in there. Yeah. Oh, let me see here. DXY. Now, here's my big thing. Okay, guys? A lot of people are really excited about the dollar. Oh, my God, look at that rally. But let's look at it in context. We're just part of this kind of sideways here, right? So we've ultimately been sideways since right here around November of 22. Kind of came down, did a triangle, came down. I believe we've got a large flat. And again, this is either 1, 2, or it's A, B. But this, you know, we're getting up into this previous resistance area. Looking at this potential, you know, topping out and reversal coming up here. As you can see here, the daily, we've dropped back out. RSI has dropped back out of overbought. Stochastic RSI is kind of flirting with overbought once more. Jumping into the weekly, we're right there around overbought. We're just now kind of peeking into overbought there for RSI. Stochastic RSI, of course, is nearing topping out and overbought. So when we're looking at this, you know, the idea that we've got 3 waves up, 3 waves down, and 5 waves up here, suggesting that we've got this flat, right? We get the move down. Now, here's the thing. If y'all don't know, the DXY is not the dollar, okay? The DXY is the weighted index. And what they do is they weight the dollar pairs. They weight the Euro USD, the USD yen, the Great British Pound, geez, freaking A, against the USD, you know, the Swiss franc against the USD. And they do that, and each of them has a different percentage. But by far, the largest weighting in the DXY is the Euro USD is over 50%. The second largest is the USD yen, which is something like 12%. So when you have the USD yen and the Euro USD, they account for almost 70% of the weighted value of the DXY. Now, I bring that up because the next chart here is the Euro USD. And do we see a similar pattern here as what we see here? Right? You jump back over here, Euro USD. Again, triangle into a flat, right? So ABC down, ABC up, and then 1, 2, 3, 4, 5. And look where we're finding support. We're finding support right now on that daily pivot. Look, it just wicked below it, starting to get some rally off there. RSI reset it just barely into oversold there. Stochastic RSI almost oversold. Look at that daily though. That daily, we got lower lows in price. We've got higher lows right now printing on the oscillator. Potential bullish divergence happening here. Stochastic RSI is oversold. So I believe that most likely the Euro USD is bottomed out here. I think that we are bottomed out here, and the next set of moves for the next year plus or whatever is going to be up the euro against the dollar. Okay. We got a pullback of just around 61.8 right there in the low volume node. I mean, everything lining perfectly. We can look sideways here, finding support right on this previous resistance support level. But this is, pretty clearly 1, 2, 3, 4, does appear to be 5 here. If not done, probably really close to being done, but that weekly is really looking good. So what I'm saying is, because this has over a 50% weight on the DXY, their charts often look very similar. And so if we have a triangle for a wave 4 into a flat correction, as wave 1 finishes up, and then a flat correction for wave 2 here, and we're seeing the triangle into wave 1 completion into this flat correction for wave 2. So forget all the stuff that everybody talks about, the fundamentals and all this other stuff that everybody talks about online, and just watch the charts. There is a structure to what's going on. And that structure does appear to be completing. By the way, if you didn't know, this is something I talked about. Matter of fact, I had a student actually remember that I had said this. I was so proud. When we were down here, and I was talking about this is likely the low, and I gave this 114 to 115 target at that time. Those of you that were following back then, you heard me say that live here. But when we did that, I said, listen, most major currencies and then the DXY tend to reverse around January of a year. So, of course, this low is here on the week of January 4th, 2021. And then as we're looking here, again, this is January of 2025 here. So, different ways of looking at it, different things that are usually happening, and that's what we're kind of seeing, right? So, again, if not complete, probably very close to doing so. So if you were thinking about being long the euro against the dollar, I would be paying attention right now. If you're looking at the DXY as a proxy to how risk assets, whether they're going to be on or off or whatever, I would be watching right now, right? Let me see here. Troy says, I was looking back at the DXY history, and it's only gone above 105 to 106 3 other times since its inception, early 80s, 99, 2000, and 2022, and now. Crazy strength since the August swing. Yeah, and so here's the thing. Usually with a flat correction, you're going to get like a sharp wave A, a wave B that's kind of drawn out, and then a sharp wave C. Most of the time, that's what you're going to get. Now, sometimes you may get a drawn out wave A, and then you get a sharp wave B and a sharp wave C. But most of the time, you're going to get a sharp wave A, drawn out wave B, takes its time, and then a sharp wave C to finish it out. So again, when we look at that generally with what we expect with flats, again, this right here is kind of fitting right into that, right? Let me see here. Yeah, the monthly will show the new weekly pivots on there. Yeah, yeah. And if you don't want to wait for the monthly, you can, just wait for the week to end. Yeah, but you can jump here on these for like the monthly here, and you'll see these new pivots kind of coming in here. So you can look here and you can go, well, this will be the weekly will be the same area here, right around 105.775. And so if you're watching this on the weekly, a weekly impulsive breakdown and close below that pivot is going to signal that that is likely complete there, and we're headed down. Again, potentially 1, 2, 3, 4, 5 of A, and then B, and then C, or just A, B, C coming down. But even if this is A, B, C, you're still looking, at 90 to 93 at least as the target area for it. And so that would get you where? That get you right back around down this area here, right? You can kind of zoom out here, see the bigger chart. There's the whole of the DXY. And so, we had our swing low back over here in right there in March of 08. So right around the time that right when we were getting into the financial crisis. And then we had up and some sideways here, up and some sideways here, and then up, some sideways here, looking to get that breakdown, right? Let me see here. I wonder if we've got this way. You could look at something like that maybe, I guess. You have like this ascending. Look at, we're hitting the EQ of that ascending channel. Yeah. Let me see this a little bit up here. There we go. That one right there. So support to resistance to support, not quite to resistance, not quite to support. And here we are hitting the EQ area of that ascending kind of channel there. So a lot of reasons to look at this potentially reversing here. Again, monthly stochastic RSI is well overbought. RSI is bullish above neutral, but curling back over at the moment. Starting to curl back over here. So, we'll see what we get here, but that's what I'm looking at, and so, like I said, looks like it, maybe done or very close to it. Euro looks closer to potentially being done here. We hit that liquidity right here. What is this week? This is the week of November 21st of 2022. The same liquidity right there. And we do have that fair value gap there. So again, could push down a little bit further. I had if it was going to, I have a target here of 1.017 or so. Gets us just on the top side of this other low volume node. But man, we're popping above that daily pivot. That should indicate that that low is in and we're heading to new highs here, heading up. Yeah, we had a, what do you call it here? Head and shoulders up here. Target. But yeah, so if you're wondering bigger picture, what's going on, this is what I'm looking at. Jojo, what's up? Andrew says, Chris, if we see price go to the weekly R1 on the DXY, seeing it go back to the pivot should be a long opportunity, right? Let me pull that up. I'll look at the monthly here. Normally, I would say yes, but in this case, the structure doesn't. This isn't the swing low. Usually, when we're talking about that setup, this is the swing low. Instead, it's part of this larger structure where the swing low was over here. So we've already got this move here, right? So if we were to get rejected, there at the R1 pivot and came back, I mean, of course, I would look for it. Just kind of generally would look for maybe a potential reversal here. But, again, to automatically say, this rally from below the pivot up to the R1, pull back to the pivot and go, we're looking at the most recent point of rally there being the swing low off the pullback. And instead it's over here, right? So we've got this structure of which we're just in a third wave here. By the way, if we're looking at this, we're almost to the 123.6. You know, most often, it's a guideline, not a rule, but most often your wave C is going to be 100 to 123.6% of wave A. We're right in that area there. So, yeah, you know, you can look for it there. But again, normally when I say that definitively, it's because that's the swing low prior to, you know, coming off the swing high into that's the pullback low. Instead, it was a higher low coming off this larger structure there. Does that make sense? So you can watch for it and see if it happens. But my initial thought is we would get a breakdown through it. I mean, you might get a bounce there and a push up and then the breakdown through it. But my initial thought is this is a three-wave move up right now for that. Let me see here. Let me kind of catch up. Let's see here. Oh, so that's, and then of course, again, the Euro USD here. So I personally am looking to take a hell of a long in this area here, potentially multi-year long. I mean, just the return on that's amazing. I mean, if I can get in there, something like this even, you know, and you're looking at, you know, a huge move. Well, I'd probably get it. Oh, this is the weekly. That's why. Okay. So we're looking on the daily here. Right. So if a rally up and a pullback and maybe get something like this here, I mean, you know, you're looking, you know, well up 50% or greater R on that, 50 R or greater on it, up on it. So anyway, overall, liking what I'm seeing there, waiting for it to do its thing. Let me see here. The three major indexes, you got the NASDAQ, you've got the SPY, and then you've got the Dow here. All of them looking like potential WXY corrections. Okay. This one could potentially be a flat correction here. If this breaks down lower, we'll keep this WXY here. This is the Dow. And if we do lose the swing low here at, get this out of the way so we can read it, at 146.33, if we lose that, there's the potential that we could see it push down toward the S1 pivot on the daily, which is right here around 41,440, 41,440, 41,430 right there. And I would look for a reversal there, take us up. You can see that the daily RSI has already reset once, could potentially reset again. Stochastic RSI down here has already reset, could reset again. So that could still happen. The SPY, again, looks like ABC down and then ABC down again. Give us a slightly lower Y here potentially. But if we do break down below that swing low there at 580 and 0.5, we would look initially here at the S1 pivot on the daily, right there around 574, 575. Same thing with the NASDAQ, the cleanest correction here of the three. If we did break down below the swing low here at 20,800.5, we'd look for an initial target of that S1 pivot there on the daily at around 20,580. Now, the red line on all these is the 50 MA. As you can see, it supported the NASDAQ, sitting just below it on the SPY, sitting a little bit further below it on the Dow. Impulsive breakout and close above the daily pivots here is going to suggest, on the daily time frame, a daily candle impulsively breaking out and closing above those is going to suggest that the low is probably in and we've got new all-time highs in progress coming up. So for the NASDAQ, that's right there at 21,356. On the SPY, it's right here at 592 or so. And on the Dow here, it's right around 43,262.5. Take it a step beyond that. If we're not breaking down any further and we're going from where we are, breaking out above where I have these X's, these interior swing highs, is going to add confidence to the idea that that low is in, new all-time highs are coming. And so it's just a little bit higher here on the Dow above the daily. It is the highest 43,373.98. On the SPY here, it is 602.48. And on the NASDAQ, and NASDAQ looks so clean. It's right there around 21,837.7. But then we should go ahead and start looking for new all-time highs coming in those. Let me see, kind of catch up here. Gold is the one, we were looking for potentially a move down toward, at least 2471.5 or the 38.2 down here at 2377.80. But I said, we're having trouble breaking down here. So if we break out above 260 or 2683.40, that's going to suggest we probably have A, B, C, D, E as a triangle, and then head up. So we almost had that breakout right here. I think this is the rally here, part of this rally that Fibble was talking about in the comments earlier at the beginning of the show, that he got some good money made on that. We stopped just prior to that 2683.40. So if we can break out above it, all of a sudden this starts looking like 3 waves down, 3 waves up, 3 waves down, 3 waves up, and then we'll get 3 waves back down for the breakout higher. And based on the height of this, and I've got this as a wave 4, so based on the height of it, gives us a pattern target right there around 2963 off this wave 4 right here. Oddly, I haven't heard Peter Schiff saying much of anything since about this point here, where gold was going down. So I don't know if y'all are hearing, and they're just not showing me his feed anymore or whatever. But haven't heard a whole lot from old Peter there. Ethereum, we're getting a breakout of this local resistance, as you can see here. Daily pivot. We're getting some volume on this daily candle. It's nearing the volume from yesterday, which was a spike of volume over the previous couple of days. So it's looking good. I've got this potentially as a wave 5 of 1 pattern target up here around 48.57 right now for Ethereum. And Sol, of course, been tracking Sol since way back over here. When we zoom out, it looks pretty clear that we've got a 1, 2, and then 1, 2, 3, 4, 5 gives us a 3, 4. Working on 5 here. So this looks like a 1, 2 of wave 5. So 2 ways to look at this. One is based on the height of wave 4 here, this height, we got a target right around 273 and a 273 and a quarter, which takes us right around this all-time high, right? Is that the all-time high? 259.90. The altar right here. We broke out there a little bit. But looking at this is likely a 1, 2 here, and we are above that daily pivot. That would suggest 5 waves up. Without any overextensions or anything, almost about $1,000, $992 up there. What's going on, Mr. Dance? Good to see you checking in. So, again, looking good, even with Sol here. And you can see this is the monthly. Look how far that pullback's done there. Weekly, resetting down and oversold. Stochastic RSI. RSI bouncing just above neutral. On the bullish side of neutral now, threatening to cross bullishly. I mean, the setup is there, right? Yeah, so anyway, that's what I'm thinking we're looking at as we continue to watch it. So overall, should be heading up higher. is what it looks like to me. There's going to be pullbacks along the way, but that's a good weekly candle right there. Almost, completing. Well, and we've still got, this is Sol, so we've still got a couple of days left. But 2 weeks ago, we had that big drop candle. And here we are kind of taking that back up over the last 2 weeks. Daily again, looking kind of good there. You can see that we broke out nicely here. Large candle spread, large spike of volume. That's an impulsive breakout. That's what I talk about. Up, pull back, retested this wedge resistance as support. And here we go again. And we're getting volume starting to show up here over the last 2 days as we broke out through that daily pivot. Continue to head up. So I like it. Let me see here. So yeah, so that's what I'm kind of looking at, guys. I don't think there's a lot for you to worry about, honestly. The best I can say to you is stop listening to all the doomsday, people on Twitter. Eventually they'll be right, but by that time you won't have any money left because you listen to them all the other time, right? But this is also where proper risk management goes and understanding, market and trader psychology. The thing I say, and I say that with a lot of, I started at the beginning talking about a lot of the inexperience that's out there saying, hey, listen, I've got all this experience, you need to follow me. And they really don't. They just are good at marketing. So they get a lot of followers. But there are some people out there who actually have a good background and they've been wrong consistently because they still haven't figured out their emotions. Some of them, you guys probably follow them. They've been saying, oh my God, it's the end of the world consistently for the last year, for the last 2 years, right? Does that make sense? So stop listening to the nonsense. Stop listening to the silly people. And if you say, well, I don't know what I'm doing, well, guess what? It's time that you learned what to do, right? It's time that you learned. I'm going to be honest with you guys. I had nothing handed to me. Everything I have, I had to create for myself over the last, 50 years. Okay. So I don't tend to have a lot of respect or a lot of tolerance or patience for people that don't put effort in when they say they are. Or people that say, oh, well, I don't know what I'm doing. And they leave it like that. That's a victim mentality. It's not going to get you anywhere in this world. I don't say that to hurt your feelings. I say that with the hopes that maybe me saying it will wake you up and you'll go, he's right. I got to do something about it myself. Nobody's coming to save you. You have to save yourself. And this is especially true if you are a man. Okay? It's especially true if you're a man. You've got to get up there. You've got to make decisions, and then you have to do the work required to follow through on those decisions. And it's not often easy. It's often difficult. But you got to do it. You have to do it. Now, again, you don't have to come to us. And it's the craziest thing I say all the time, right? I tell you guys all the time here, listen, even if you don't join us at the Trading Academy, find somebody somewhere that you can focus on and get the help that you need. Because if not, you're easy money in the markets. You are so easy, you don't even know. So get out there and do something about it, right? Now, right now, we'd love to have you with us. And I happen to believe that we teach better and we have a greater depth of and wide swath of information and content than anybody else. I have something like 500 plus hours of educational content, guys, in there. Okay. And that's not including the 3 times weekly that I go live. That's 3 hours added on every week. And all the other stuff we do. And then, of course, there's Fibbo's Threshold Theory. Fibbo's in there. I'm working on making him get out of his full-time job, head trader at his company, and coming over with TWC permanently. So that would be awesome. We're working on that, getting that to happen. But you know, if you come to TWC and you pay $97 a month and you can't learn how to trade, you don't learn how to trade, between Fibbo and I alone, that's what, 55 years, 56 years of experience. I have to be honest. You're not being honest with yourself about if you're really putting in the focus, the discipline, the effort, the consistency, and the patience that you need. Because I know Fibbo will, and of course I will bend over backwards to help you understand and help make things clear to you and to answer questions. I mean, I've got chart critique section where if you're just learning, you put your chart in there, go, I think this is what I'm looking at. Help me, help me understand what I may be getting wrong. And I'll go in there and say, yeah, okay, that looks good. That looks good. No, that's not correct because of this. Don't forget the rule is this. I'll let you guys know. We'll do that. That's how dedicated we are to helping you guys be successful. Pricing will go up. By the way, guys, just so you know, I think, we've been doing $97 a month, and you get access to the Traders Club, which are mine, Fibbo's, Andrew's, and Vince's trades, and our updates and our market analysis and all that every day. You get access to Fibbo's threshold theory, and you get access to all the group coaching stuff, that I was charging basically $4,000 a year for all up front. We've been doing that for $97 a month for a few months now. People are seeing the value in it. That's going to go up to $129 a month. But if you are currently paying whatever you're paying right now for that, your price is not going to go up as long as you continue your subscription. Set it on auto renew and make sure you got money on your card to do it. No matter how much we raise that, you will get to continue to get that rate. It's just my way of always kind of, helping those who have believed in us and things we do at TWC. But pricing will go up on that. So if you want to get in at $97 a month, do it now. Don't wait, because you will pay at least $129 coming up. I'm also, I had a mentor program for a couple of years, and we're winding that down now. And a lot of that mentor program was discussions and understandings about mental and emotional psychology. So I'm sorry, our psychology, our emotions, stuff like that. I'm going to be adding in more direct content for that, for our all access members. That's the $97 a month right now. Okay. I'm going to add that in there. But when we do the $129 a month and the price goes up, that's not going to actually be included in that. That's going to be up to something that you're going to have to pay for separate. So, you get a lot by joining now if you're not already in. If you are in, you get a lot more by hanging out and remaining a member. You guys can join at texaswestcapital.com and jump on there and do that. But really, there's just nobody out there that offers as much content and education as we do, especially education part of it. And I really believe there's nobody that offers a better education, because nobody out there, very few people that actually really teach those things that I really focus on, which are all about how do you approach markets? How and why do markets move the way they do? Let's talk about the psychology and your emotions so that you understand what you're going through and what other market participants are going through. Okay. Let me see here. So anyway, just want to kind of let you know there. Digital Mining Solutions, what's up, buddy? Says, no joke, Chris is very active. Yeah, I mean, we're there. I work, I do about 12 to 16 hours a day, Monday through Friday. And usually I'm doing other behind the scenes work on the weekends. But I usually do take the weekends off, and I will take holidays off because, man, I work a lot with it. But, we're getting this really continuing to blow up what we do at TWC and trying to give you the greatest bit of education you can really get. Taking my 30 years of experience and trying to distill it into actionable information that you can use. Because a lot of the free stuff that you find online is either half-truths or outright lies. And I know that's hard to accept because everybody wants something for free. But the one thing I've learned in my life is you often have to pay for the good stuff. And when you pay, you usually get a quicker and a greater return than when you're trying to piece together free stuff. But in trading, a lot of that crap out there is at best a half truth. Often it's outright lies. It's not because people are trying to lie to you, but again, it's because people are saying, look at me, I'm a trader. They're not really, and they're just regurgitating all the things that people have said over the years without understanding what it means, without understanding why it means what it does. So, we try to set you on the right foot there and get you really thinking and understanding markets versus the same regurgitated content that everybody else does. Let me see here. Jojo, what's up? So I've been a part of a few different trading crypto clubs over the past 5 years. TWC is by far the best. Oh, I love that. Thank you. Thank you. We work hard. And I screw up sometimes. I make mistakes along the way with the way I try to do things. But I'm only human. I sometimes try to do more than I can, but I make it work. We just, it's what it is. It's always with y'all in focus. It's always with y'all in mind. Let me see here. Would you say make America big dick? I like that name there. Looks like you had a Trump picture in there. It looks like. What'd you say? What the most insane thing was that 99% of these crypto YouTube our tubers call for DXY's dumps during the Bitcoin rallies. It's insane, but these people would make such a call. Doesn't mean that I want them to follow you. Gosh, it's weird if I ever found their viewers actually properly trade. Well, I'm glad you follow us on there, But again, we continue to expand what we're doing in hopes that we can provide even better education because I'll be honest with you, it's what I love, right? There's this nonsense that those who can do and those that can't teach. The reality of it is those that can often teach because they want to, provide their knowledge for others because they figured out how it works, whatever the thing is, right? And so, that's, it's a thing that people say, but it really is, it's kind of silly when they say it there. Let me see here. What'd you say, Mark? I'm subscribed for life. Mark is my favorite Canadian, just so you guys know. He's my favorite Canadian from Canada. He said, still worth it at that price. It was sick. Highlights of my 2024. Yeah. And so here's the thing. I mean, we got people from all over the world. So sometimes people worry, I can't make the live streams and is it going to be worth it? I mean, I think it is. We have people that continue to remain with us from all other parts of the world, Japan, Australia, New Zealand, Czechoslovakia, I believe is one. We've got the UK. We've got quite a few people. We always seem to have quite a few people from the UK. Got it down in Chile, Mexico, Canada, all over throughout the world. And that's why I always make the live streams, the recordings available. And you can always ask questions right after that. Don't think, I didn't get it live, so I can't ask questions. Sure you can. Watch the stream, the recording, and then underneath it, ask your question. And the best part about that is you're going to have a question that somebody else is going to have. And because you ask it there, I can answer it there. And everybody's coming and has the same question, or maybe didn't even think what you thought. But then they went, oh, crap. Yeah, what about that? And they've got it right there. And it helps them out a lot. So, yeah, it's good times, right? Let me see here. See, I'm telling these guys, look, see, again, don't take my word for it. I know it's hard to believe me. It's my business, right? And there's a lot of scammers and there's a lot of charlatans out there. But that's why I really appreciate when our students and other people, joining up saying, listen, yeah, like Peter here, $100 is chips. He's talking about the $97 a month compared to what you'll make off the alpha here at TWC. And again, that's not just me. That's Fibbo, that's Vince, that's Andrew, So we're really kind of expanding and adding more people in to give you guys more access to more information, more trades, more analysis in there. Let me see here. There's even a guy that's from Chile. I mean, is that even a real country? I don't know, Diego. From Chile. You tell me, buddy. He is my Chilean that I was speaking of. He's been with us for years. Absolutely. And just these are amazing people, guys. I'll be honest with you. When you get in there, say hi. These guys you see talking here will likely answer you right back. And they want to discuss charts. And if you got a question, ask it out in the chat, in one of the chats. And they'll jump in there because a lot of them have been with us for years and years. And they already know the way that I teach and the things that I teach. And then they'll be glad to, jump in often before I can even get in. And it's good information, It's not just somebody just kind of talking out of the rear end. It really feels, if you put the effort out there at TWC, you'll really get a lot back in terms of the community there. But it won't happen if you just kind of, now I know some people are really busy and they can't talk all that much or barely at all. And I understand that. But if you can and you choose not to, you're really losing a lot of what you can gain, how much quicker you can learn. That's why I set it up the way I set it up, and the space is the way I have it, and the chats the way that I have them. It's just being immersed in there and hearing the stuff. And at first you're going to hear stuff. You're not going to understand what those terms are. Suck it up. You'll be fine. It's a little overwhelming at first. But when you get in, at the top of the spaces list on the left-hand side of your app, up at the top, it says, welcome, read first. Read it first. There's an onboarding video in it. It tells you about the platform and our schedules and everything else. Go through it. Under that are the rules. Read them so you don't break the rules. Under that are the terms. If you ever see a term out there like, I don't know, if you saw BTFD and you didn't know what that meant, in a chat, you could go to the abbreviations and it'll be in there. By the fucking dip, right? But other things we use like LVN or HVN, low volume node, high volume node, different things like that. So if you're newer, you're going to be overwhelmed a little bit first, and that's okay. That's okay. Take a deep breath. Go through the basic training first, and then, choose whether you want to go through Elliott Wave next or Wyckoff next. That's the way I would say to do it. And then after you do those, then I'd say do the price action. But, again, you can get it all in. There's a ton of stuff in there. We even got 40 or 45 different trading strategies beyond the big ones that we teach that teach you how to get into trends. Like if you were doing this here and you're like, how do I get in this trend? It's already going. I missed my entry down here. How do I get in this? We've got 40 or 45 different ways for you to, different ways to do it. Okay. Allison, what's going on? Says it honestly starts to feel like family after a while. It really does. And, before I started TWC 7.5 years ago, almost now, I had never been in a group or a community or anything like that. But I went with it with the idea of, listen, if I was just starting out today, what would I want to learn? And beyond that, knowing what I know this many years later, what did I not know that I needed to learn that I should have learned at the beginning? And that's how TWC started. That's how I kind of started with it. And we've just continued to expand beyond that. And we really try to make it, as the community feel as good as possible in there. I'm accessible. Sometimes, especially if you're trying to DM me, I may miss your DM, or it may take me a while to get back to you. I'm obviously really busy, right? I've got everybody DMing me and other people and the work that I do at TWC, both with the charts and the analysis, as well as, the rest of the company. But I do, I get back to you. And if I don't, and it's been a few days, don't feel bad about just saying, hey, just checking in again, making sure that you saw this. Because I don't ignore anybody on purpose. I try to be as accessible as absolutely possible with everything I have to do anyway, and do that. And I know Brian's the same way, and Vince and Andrew as well. So yeah. Let me see here. We'll look at some charts here in just a minute. Murray says, I'm still using Chris's pivots points. Amazing. Oh yeah, I do sell a pivots points course as well in there. It is something, you see me talk about these different things about pivots here. That's part of what's in the course. And I honestly, pivots were something that I did for about 2 years. That's it. Right there around 2010 or so. I stopped doing everything else I did. I just did pivots because I wanted to learn them as well as possible. And I learned some really amazing things about the way price action moves with pivots, which is where I teach in there with that. And so, you know, and what I tell you about, you know, some of the things I've mentioned about pivots here during this this live stream as well. And so, yeah, you know, it can really change the way in which you understand and look at charts and price action with it. It gives you more of an understanding of where, and then when you get that, you know, you lay that on top of some other system or strategy that you're using, and you get confluence in your targets, your stop losses, your entry, stuff like that. Man, it really can just rock your world in a good way. Bamboo says, yeah, Chris, while mentioning DMs, can you check? I will check today, buddy. Yes, I will check you. Peter, you like that pivots course as well? Ah, I love it. I love it. Okay, so let me go here. Let me see here. I think I saw somebody ask for ADA, and there was another one I saw somebody ask for. So if you can ask for it again, I'll try and get it done here. And I'm not here, by the way, with TWC, we're not here to tell you that you have to trade a certain way. We're really here to explain how and why markets move the way they do, how to approach markets, how to approach trading, those types of things. And you can use the things we teach, you know, Elliott Wave, Wyckoff, Fibbo's threshold theory, stuff like that. Or you can use what you learn from that to help you understand other strategies and other things, or develop your own as well. So yeah, we do, you know, we're not here to say, oh, you have to learn this way and there's no better way to trade. No, that's not truthful. That's not the way it is. All right. Let's see here. So we've got this pullback here. Let me make sure now, because I went back a little bit further. How far is that pullback? Just around 50%. I'm going to go with that still as a wave 4. Based on the height of this pullback here for wave 4, that's a pattern target of 1.8694. Let me see here. Looks like ABC here. It's not the hourly pivot anymore. Back down this old chart. Where's that daily on here now? Oh yeah, look at that nice push through the daily pivot. When I say impulsive breakout, this is what I'm talking about. Notice locally here, it's a large candle spread, large candle body there, and there's a spike of volume. That's usually what we're looking for when you're going through something like a pivot or some, you know, descending resistance or something like that. That's the impulsive breakout, and then you want it to close above that as well. And that usually indicates that a reversal has happened here and we're heading up. But we need to get above this swing high right here. What is that? 1.1819. It's right around the R1 pivot on the daily. 9. Let me see here. Oops. I know I've still got that from a different chart. Got the text white. There we go. Yeah. So, I mean, it looks like with this right here, I'm pretty sure that low is in. Breaking out above this 1.1819 is going to add confidence to the count and reinforce this pattern target. This right here locally, this is a wave 3, it looks like. So we can do like a 1. Actually, that looks like 1, 2, 3, 4, 5. Looks like a flat. Why is this all coming in white now? There we go. So this is probably a flat right here. It's probably A, B, 1, 2, 3, 4, 5 is C. We've seen a lot of that coming off these wave 4s. You guys may have noticed, or if you haven't, you can look and notice now on these alts. All right. So that would give us 5 waves up right into this supply structure. By the way, you'll learn supply and demand structures. That's something that I do. Nobody else does that. It's not just wicks or areas, certain areas of wicks, but I do teach it in there. You can see that training. But you can see right there toward the top of that. So it looks like we got a wave 3 at around 1.1998. 4. And so if we can get this, to me, that looks like that would be a 1 and a 2, which means we're going to have a larger wave 5 target here. If we can get rejected around what, $1.30, then that would give us, let me see here. If we can complete wave 1 there and get a pullback, that's a 50% right back here to about $1.03.5, right at the low volume node, right into what's going to probably be a fair value gap here on the daily. Let me see here, and then that would give us 5 waves up. How much higher are we going? So, it has to get to this level, and it could always pull back to 61.8 or something. I don't think it will. I think we'll just do the 50, but that would give us a 3 up here at around $2.47. And that would give us 5 up here at around $3. So if we get this wave 1 up here just prior to the swing high, get a 2, 5 waves up will get us about $3. And all that's going to end then is wave 5 of 3. So then we'll have a big 4 pullback, and then we'll still have a wave 5 going up. So I like what I'm seeing so far. Oh, Diego, look at him talking about over there in the Trading Academy. He says, by the way, guys, that Bitcoin triangle scalp I told you about 40 minutes ago, it's given me over 2 Rs so far. So hope some of you took it too. Love it. I love it. Let me see here. See here. Oh, TSLA was the other one, huh? Let me see here. Where is my TSLA chart? I think it's this one. So a 38.2 pullback is around $355 or so. We may not get there. We may be going here. We'll see. Impulsive breakout and close above the daily pivot here at 413.75 is going to suggest that the wave 4 is complete, just a little short of 38.2. And then that'll give us pattern target of around 558, 559. But if we can get rejected prior to that and come on down here to that 38.2, then we start looking up here at 576, 594, 612 as our target areas on the way up. Whether we get to the 38.2 at 355.5, the daily S1 pivot at 338.5, or the 50% pullback at 322. This is a triangle here. Usually triangles catch as support because what are you doing? You're just going sideways. You're building a base. People don't tell you that kind of stuff. It's not just, oh, look for a triangle, pull back to it. No, why is a triangle going to hold? Why does it work like that? Why does wave 4 usually pull back into wave 4 the lesser degree? Or wave 2 pull back into wave 4 the lesser degree, There's reasons for that. Discuss all that. The Academy. So that you understand. That's the whole idea. I don't want you just blindly regurgitating, oh, if it does this, do that. You're not learning anything because markets tend to change. And the more you can understand about why that is, the more you can adjust and change with the markets as they change. Because again, if you're a trader prior to COVID, you notice that the market is marketably different now than it was prior to COVID. There's been a material change in the way that money is flowing and what's going on. There's a material change in the way that all that's happening that wasn't the same way prior to COVID. And if you're a trader and you don't understand how and why markets move the way they do, you're confused. You've been telling people that we're going to have the top has been in You've been telling them constantly for years now, for 3 years, 4 years, 2 years, whatever. And it's not there, and you can't understand why. And you go to the yield curve inversion. You go, look, the yield curve's inverted, and then now it's uninverted. So now that's the end. And it keeps doing that, and price keeps going up. But if you don't understand why, and you just do these other things, what use are they? They're just going to get you to lose money. So I probably over-explain quite a bit, not just here, but in the academy, because my goal is that you understand why. You understand how and why as much as possible. Okay? So yeah, TSLA, if we get rejected prior to the pivot, we'll look at the 38.2, the S1 pivot on the daily, or the 50% as the next, as the likely target area. And then we'll have one of these targets up here. The deeper it pulls back, the deeper that target, the higher that target will be to these higher targets here. Let me see here. Rune. Ooh, I don't know when the last time I looked at Rune. Was that USD? Can we do a USD? Let me see here. Oh, Andrew's doing a trade on Ethereum on the daily. He just posted it. I saw the ding come up. Let me see here. Rune, probably USDT, right? Let's see here. You'll also learn at the academy the only useful trailing stop, the only one that makes sense, the only one you should ever use. And it's nothing you've ever learned before. But it's logical, and it makes sense, and it keeps you in a trade better than any other trailing stop, better than any static or dynamic trailing stop. I teach that in there as well. When you're in a trade and you just can't exit, you just don't know if you should exit out yet, right? What do we got here? Well, Rune, looks like we've got, oh, okay, it looks like we got 1, 2, 3, and then 1, 2, 3. So it looks like a WXY here. So it looks like we've got A, B, C. Change it to that. And then it looks like we have, again, off this high here, we got A, B, C again, which gives us a W, X, Y, a little complex correction, double zigzag there. Let's see here. How far is that pullback off that low? 50%? 61.8. I mean, it looks good. Impulsive breakout and close above the daily pivot here at basically $5.50 should indicate that the low's in and you're headed up. Let's see. It's a 1, 2 there. Looks like all this overlap looks like maybe some sort of leading diagonal here. Yeah, it looks like it could be like a ABC 1, 2, ABC 3, 4, WXY here is 5. So it looks like we got a 1 and a 2 here. Wave 3 at $25. Wave 5 at 38.5. We get this big pullback here. Pattern target off that 16,995. How come it looks like I'm not getting... Okay. I may need to change. Give me just a minute here. Oh, those are on log scale. Okay. I don't know why that wasn't on log scale. It's on log. Okay. So pattern target actually off this pullback is up to around 28.97, which gets us right around that, just beyond that third wave target area there. So yeah. Look at that weekly reset, stochastic RSI. RSI resetting right around neutral, just below. It's pushing back up above it, threatening to cross bullishly as well. This looks like a flash. Looks like 1, 2, 3. Well, let me see here. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. And then A, B, and then 1, 2. Well, ABC is 1, 2, ABC 3, 4, ABC is 5 as any diagonal. Yeah. So this looks like a larger 1, 2 here heading up. And then this is a 1, 2. Bouncing right off the previous year's weekly pivot right there. Right at the top, notice the low volume node is what's containing this as support. So yeah, I like it. Let me see here. HMD USDT, yeah, HMND USDT, yeah, I know you were asking about that earlier. I may need to go soon since I'm already over, but let's see here. By the way, the other thing that you get as part of the TWC, the all access class there, is that you get chart requests. You get to see what other people are requesting and my charts on that. And then, of course, you can request charts as well. So turnaround's usually 24 hours, but depending on how many there are, if I'm coming back from the weekend. By the way, it's 24 business hours. So if you do it, on the evening on Friday, you probably won't get it till Monday or Tuesday. But because you usually have a lot of stuff coming in from the weekend. But yeah, we can get that there. HMND USDT. Oh man, look at how clean that is. Look how beautiful it is. 1, 2, 3, 4, 5. Wave 3, large candle spreads, large volume. So wave 1 volume, wave 3 volume, wave 5 volume. I mean, man, this is textbook. Well, I say 1, 2 there. 1, 2, 2 here. We'll do it this way. 3, 4, 5. Then we'll come here, go 1, 2, 3, 4, 5. We'll move this up 1. There we are. Yeah, I mean that's pretty textbook there. 1, 2, 1, 2, 3, 4, 5, 3, 4, 5. That's clean. Let's see if we're done here. Oh yeah, I got rejected right there at the weekly pivot. It's beautiful. And where did it pull back to? Low volume node. Matter of fact, look at this. Yeah, right there. Let me kind of make it a little bit bigger, maybe for you to see, but you see how it's got these little white candles here? Support or resistance right there in that same area. So yeah, you get that support right there. And that's what we got off there. You see here. So we dip down here. Is this going to be 1, 2, 3, 4, 5? Let me see. Vivaswani, we look forward to seeing you next Friday, bud. Let's get into the daily. See, I'm looking at this and I go 1, 2, 1, 2, 1, 2, 1. So my first thought is 1, 2, 3, 4, 5. A, B, C is a flat. This looks kind of straight down here. Oh, no, okay, it's going to do it. It looks like it's an ABC, ABC, ABC. That's a deep pullback, and then this looks like crap here, but this looks like it could be 1, 2, 3, 4, 5 here, ABC. It's iffy for me at the moment. There's a lot of overlap, a lot of crap here, but looks like this could be a 1 with a really deep 2. And maybe a leading diagonal here. Well, let me make sure that wave 3 isn't the shortest. Nope, that won't work. I guess we'll just focus on this bigger one because this is not really conducive area. I mean, it could be a 1 with an A and a B. 1, 2, 3, 4, 5. C maybe. But here's what I would do locally here. Potentially 1, 2 done major. 1, 2 minor maybe done here. Minimum expected 3 at 37.72. 5 up around 55 cents. Impulsive breakout and close above the daily pivot here at 12 cents is going to be a good indication that low may be in. This is kind of sketchy on this here. So I would look for next a confirmation on a breakout above the swing high at 19 cents just to keep you safe. But if we can get that, then potentially, 5 waves up around 55 cents. My third wave target on the weekly. I mean, it says 21.93, which is a huge move from where we're at here. Not saying it can't do it, but I would also look at potentially the idea that this is a 1, 2, this is 1, 2, 3, 4, 5, this is a 3, 4. Give a 5. So the first thing I would look at is a pattern target on this pullback. So again, the idea being this is a 1, 2, 3, 4. This might be the better count. See here, changes the red. So again, this interior is 1, 2, 3, 4, and 5 here instead of trying to get this little one in there. The pullback here, I mean, obviously that's going to be a deep pullback. It's a long time coming here at 61.8, but it's all right. It's fine. If we can go off this and continue up, I would probably look at a pattern target first of $1.88. I feel better about that. I feel better about the $1.88 than the 21.93 target at the moment. So I'm gonna go with the idea that the more local count here, 1, 2, 3, 4, 5, with a pattern target around $1.88. Which even from where we're at here, I mean, we're at basically 11 cents. So yeah, that's what I would look at first. And then once, if it is 5 up there, we should get a nice pullback down here probably back down toward the, yeah, see, that would give us a 1 up there, and then a 2 would pull us back around the 16, 17 cents area, maybe a little bit lower. But that would get us right here at the top of this resistance here. See how great that works? See, I like that pullback on that 50%. If we get just that pattern target and get rejected, we get a 1 up here, and then 2 pulls back right where this previous resistance was. I love that. Support there, it's 50%, and then you go up higher. So I think I'm going to go with that. Let's go ahead and get this off here, the rest of this. 5. That'll get us 1 up there. That'll give us a 2 on that pullback there. I think that's probably more like what it is. Yeah. So there you go. There you go. Yeah, with 22, I'm not saying it can't get there because, crypto does some really crazy stuff. But, when I look at that, see, and that's kind of the way that when I'm looking at this and I do it, I go, well, I have this count, but man, that target seems kind of insane at the moment. So is there something better that might be more likely? I think this is better and more likely, even though the wave 4 has been pretty big and it's kind of deep. I think it's a better idea there. So let me see here. But anyway, it is it's 10 till 1, so I've got to get out of here, guys. Again, if you've got chart requests and whatever, I mean, geez, even if that's all you used for the $97 a month, I mean, it's like having your own personal person out there kind of doing that for you, right? Not that I'm gonna not that you can sit there and do 5 a day. I usually limit it to 2 at a time. Let me get those 2 done, and that way, because when the markets are really moving, we'll have a lot of chart requests. And if you've got like 5 or 10 on there, then other people don't get theirs done. So I usually limit it to about 2 at a time. But once I do the 2, then you can come back with 2 more if you wanted to or something like that. But, I mean, that's one way of looking at the $97 a month. But, there's a lot of education in there, and you can really learn to do it yourself as well along the way there for that. So I'm going to do that. All right. But that's it, guys. I really appreciate you joining in as always. Remember, next week, Fibbo is going to be with me, so check in with that. We'll take a look at his charts. I'm currently trying to schedule with Juan Leon over there. He's the head crypto researcher at Bitwise Investments. They're the great guys with Hunter and all of them over there, and Edward Park and all them. You'll often see me retweeting some of their stuff because it's really quality information, guys, and they really step out more than the other, Bitcoin ETFs. That's not all they do, but when we look at Bitcoin ETFs, I mean, they're really out there giving you guys a whole bunch of great information, and especially letting you know what ultra high net worth individuals and other companies and things are doing. So maybe get you out of the retail nonsense that you often hear with people that aren't connected like that. But anyway, Juan Leon, they've got another report that they put out, and he wants to kind of present it with you guys. And it's always a good time with Juan. So I'm trying to get with him. Hopefully, maybe in 2 Fridays from now, I can have him on here. But that's always good for, a half hour, 45 minutes as well. Okay. Diego says, so about that triangle scalp again, it hit the first take profit at 99,540. So there you go. Plan your exit. So there it is. Soren, good to see you, buddy. Scott, the Cretan, Diego, Randall, Fiboswani, Brett, everybody. Good to see y'all here. As always, remember, the only thing you control is how much you lose. So please keep working on that risk management. I hope you guys have an amazing, amazing weekend. Trade safe. Get out there. Do something a little bit other than trading as well. Your brain will thank you for it when you come back to the charts. And Revy, what's up, man? I see you in data there. And other than that, hopefully I'll see you guys at the Trading Academy. If not, keep following me there on social media. And again, the website is texaswestcapital.com. All right. All right, you guys, take care. And I will see you next week.